Well, welcome everybody to a delayed Strategus podcast, little observations on the market here. I'm Pat Allwell.
And I'm Ryan Grabinski.
And your neighborhood-friendly Todd Sohn.
Yeah, well, neighborhood friendly if you want all the balls in the neighborhood collected by the Sohn household and kids told never to play ball next to their cars again. Lots of stuff to talk about. Let's talk about, as we have in the past previous podcasts, about the most important price in the world. That's always been my belief.
Sure.
Which is the 10-year note. I saw Scott Bessent on the Larry Kudlow show say that he and the president focus on that all the time. What's going on there?
10-year, it's after the CPI print yesterday, we saw a jump higher in yields to north of 460, but today we've come back down to, we're at the 450 handle on the 10-year yield. I would say, for an extended period of time, we've been using 450 as the kind of the line in the sand with regards to risk assets. As in the past, we've seen the equity markets sell off when we've gotten to that 450 level. I'd say the bar has probably moved a little bit higher with regards to yield, so maybe it's closer to that 475 mark now. And the reason I say that is because if you think about just rates, the longer that we have rates at the 450-ish level, the more comfortable that the market becomes with that higher level of rates. We're in this rate normalization period, and when I travel around and I talk with investors around the globe, one of the things that they actually mention, if the U.S. 10-year yield gets above, call it 5%, they're happy to buy 10-year treasuries at that 5% level. So it does appear that the market's getting more comfortable with the higher level of rates. The one thing that I would say I'm a little skeptical about is, there's some talk of rates actually moving, if they move lower. What does that ultimately signal now that inflation's actually starting to perk up here? Because if we're getting higher inflation, but how do you get rates lower? It feels as though that would actually be signaling that there's some sort of crack that's forming that we may not be aware of.
There's an economic slowdown, right? Bonds rally when rates slow down. That's why the bears on the budget deficit are almost uniformly wrong when they argue that rates will go up if the budget deficit goes up, because no, budget deficit goes up because of a cyclical weakness in the economy, and that means that other credit demands are not being used, so it all flows into the Treasury. Todd, I know that talking about levels in the 10-year note's a little bit dangerous, but I had heard 450. We got to 450, bounced above it. We got up to 464 yesterday. Now we're at 454. The huge moves here. What do you think?
Volatile. Well, I think it's interesting on the TLT, which is the 20-plus year Treasury bond ETF, most popular one. There's a massive amount of short interest there. So those shorts got a reprieve yesterday.
That's bullish, though, isn't it? If there's a massive amount of
shorts. Well, if you're for a contrarian, yes, but it hasn't worked necessarily, which I think is interesting.
So you short this TLT, you're not only short price, you're short yield, or you're going to pay a coupon.
Yeah.
And that's a monthly coupon, right?
I mean, then you get, if the price is shit.
At
least that benefits them. The other somewhat cynical part is the move in bonds has finally closed a YouTuber to close his ETF. Because he had a 3x long treasuries fund in there. And that basically blew up the fund, if you ask me.
Oh, is that what happened too?
Yeah.
When was that?
They announced they're closing it this week.
And what were the assets in that?
30.
So
but they had a 3x. This is a YouTube personality who has an ETF for some reason. I don't know. And they had 3x long treasuries in there, long duration treasuries. That's an immense amount of volatility.
He's a YouTuber. Maybe now he'll be a TikToker. Let's talk a little bit more about the bond. Is there any, could you put together a case that we're looking at the first real assault on federal spending in our lifetimes? I mean, they've talked about it in the past, but they've not really assaulted it. This looks like the machine guns and the hand grenades are being thrown all over Washington to blow back government spending. They claim that they've found all these little pockets where money has been misspent, including here in New York with the migrant hotels. Could that be a reason why bonds are going to have a bit to them?
It's possible. I guess where the question is what is all these, at the end of the day, a lot of it is small dollars. So what does it add up to? And what are they able to actually, trim from the next budget, right? They're not going to be able to claw that money back. but they'll be able to find areas within the budgets going forward where they can say, hey, we can cut spending in this area by $5 billion. We can cut spending by $2 billion. What is the grand total of that at the end of the day? There, frankly, billions of dollars are like rounding errors at this point.
But don't be so cynical. As Jason said, you take care of the pennies, the dollars take care of themselves, and then damn it, that week they go to eliminate the pennies.
Yeah. I mean, don't get me wrong. What DOGE is doing is something that has never been attempted before in government, and it's interesting as an outsider to watch, because you see various corners of Washington are up in arms about it. They're worried about it. There was a good clip, actually. It was Elizabeth Warren. She was in front of Congress, or it was the other day when Powell was speaking, and she said use the term Musk's hackers. Right? He didn't hire hackers, right? He actually hired individuals to kind of go through the Treasury system and understand where the payments are going. They're not hackers. They were granted permission to do this. Now there's all legal challenges against it. But that's typical Washington stuff. They don't really know. Washington never wants anything to get cut. They love to spend. There's no any career politicians don't have appetite to cut spending, really. So it'll be interesting to see how it shakes out. I think when I think about DOGE, I think about what are the unintended consequences of DOGE, and kind of what are the areas of the market that could actually benefit from it, and what are the areas that are ultimately going to get cut. Right? There's initially in the early stages when DOGE was announced, there was some major concerns about companies that had government contracts, and all of a sudden their revenues were going to decline 20 or 30%, whatever their government exposure is. That seems a little overblown to think that that's ultimately going to happen, because at the end of the day, the administration recognizes that this government provides a portion of revenue to companies, which provides employment to people. So if all of a sudden you cut these payments back 20% at a corporation, they have to lay people off. They see profits decline. I don't think the administration, that's not the administration's goal here, is not to weaken the economy. So I think they generally have the best interest of the U.S. in their in sight when it comes to what they're trying to achieve.
Well, one of the things that they're trying to achieve too, and if you go back to Scott Bessent, where he argued Abe with the 3%, 3%, 3%, I think Abe had the three arrows. One of them is get the budget deficit, which is currently north of 6%. Is it 7?
6, yeah.
Down to 3%. The historical average is 2.6%. So that would be heavy lifting. But the other one is energy. So we always talk about energy here. I saw the poor journalists at Bloomberg Green were probably crying uncontrollably because New Zealand, which has been one of the leaders in green energy and swearing that they're going to suffocate their sheep at night to keep the flatulence as low as possible, is now, there's talk that the government powers in New Zealand might be renouncing the Paris Accord next year. A lot of this stuff has been created by politicians without consultation with Mr. Market. Best example of that comes from a New York Times story.
But one of their objectives, right, is they want to get oil prices down.
Well, they want to get oil prices down. The whole energy stuff.
But let's be realistic about this. There is no appetite for investors in energy companies to see $40 oil. Right, the fastest way for an energy CEO to lower his share price is to go out and say, "I'm going to punch more holes in the ground."
Well, let's. There's so many moving parts here. I know that you can nip your fingers off on it, but Dan pointed out this morning that this rapprochement between Putin and Trump will occur in Saudi Arabia. So you're having the three largest oil producers in the world meet in the oil capital of the world. Trump has already called on Saudi to lower oil prices. One of the threats he's used against Russia is lower oil prices would diminish their appetite or their ability to finance weaponry. Oil is sort of a key thing. It's one of the three components of the Bessent plan. What happens if Saudi Arabia wants to grab market share? They've lost market share to the Russians because the Russians have been discounting their oil. What happens if they want more market share? How do you get lower market share, Mr. Grabinski?
Well... So if the Saudis are going to go for market share, then they're going to increase production, right?
And they're going to get lower. The price goes lower.
But you're assuming that that's what they want to do.
Well,
the Russians, you bring up Russia here, right? Trump's trying to broker a peace deal in Russia, and if there is any war premium in the price of oil, that's going to come out if there is a peace deal between the
well, there's definitely a war discount for Russia. Russia is selling its oil on the markets, primarily the Chinese. I think that's their largest customer, and the Indians.
Cleveland.
No, that's where I was this week.
So I just think that this lower energy prices, in fact, oil was off 1% on the news. We get oil a little bit lower. Remember, the Dallas Fed said that the Permian Basin is profitable still in the low 40s.
It's not sustainable.
All right, you're not bullish on energy though, are you?
I actually do like energy. I like the natural gas side of it. I think that's more interesting because that also has a play. There's a play on that with regards to the electricity generation, and it's at the end of the day, we're not going to be building more wind farms under a Trump administration. I think he's made that pretty clear. And I don't know that there's a significant appetite for solar, just given the direction that tariffs are moving. And so what does that leave us? That leaves us nuclear and natural gas.
Well, the nuclear stocks are sort of crazy, right?
New meme stocks.
Yeah,
What's the biggest nuclear stock that people are going crazy about by market cap? Do you know?
Well, Cameco is the largest in terms of miners.
That's for uranium.
Uranium. Yeah. I have nuclear uranium. Then I think of I don't know which one was largest. Oklo.
Those are I would say that's on the pure play, small modular reactor side of things. But the nuclear, like the Constellation Energy or Talon, they're in the utilities sector, which is what's also interesting about them. Those that's what everyone's focused on. I'll give you one little tidbit though that's interesting, and I've been thinking more about this, is that if these companies are actually able to sustain some of these growth rates that they're talking about, that they're forecasting, there is the Russell 1000 index is only the utility sector only represents 0.3% of the Russell 1000 growth index, and it only represents 0.4% in the Russell 2000 growth index. So in the reconstitution of these indexes in June, if they ultimately have to include some utility stocks because they meet the criteria, that's a big tailwind in terms of flows into.
But do you really believe that the utilities are now growth stocks?
Yeah, the unregulated utilities certainly.
What are unregulated?
Constellation Energy, Talon.
It's not Con Ed, I'll tell you that.
But okay. So let's even talk about the
PSE&G. It's not.
No. But even the regulated utilities, right? Look at some of the rate cases. They're coming in. I don't know about your home state of Vermont is, but there was a New York Post article that talked about New York City seeing electricity prices increasing 11%.
Why?
Well, because you can't have a natural gas
in these renewables, which, contrary to all the blah blah blah, including, I'd hate to go back and beat up the weepy journalists at Bloomberg Green, they're not cheap relative to the other things because they're not permanent. The Germans created a word, I think it's called Dunkelfluben, which is for when it's dark out.
What was that word?
The wind doesn't blow. Dunkelfluben.
What do flows look like into the utility sector? Are they?
Well, plain vanilla utilities, not much interest. It's more thematic plays that have utilities exposure that are picking up, like a nuclear, renewable.
Yeah. We could also tie this. This also comes back to the rate outlook, right? If rates are moving higher, that's usually not.
We don't know. We don't know about rates. Looks like right now you're worried about that they might be moving a little bit lower. But I did notice Tom Tesouris is saying that the cheapest area of the corporate market are utilities, if you can buy them. I think a lot of this stuff are museum pieces. Is what they're
they're sitting in portfolios. They're locked, and
you can't.
Liquidity on those.
It's a great observation, but it's like saying I think a great bond here is the Harvard Corporation bond that's traded at 10%
there's also another interesting trend, right? And so utilities, obviously, it's a capital intensive industry. You have a lot of maintenance capex, but just yesterday there were 2 or 3 utility companies that talked about issuing equity to raise the capital for maintenance capex rather than issuing debt. So that might, the utility bonds might be attractive, but it doesn't appear that they're going to be more of them.
We talked about this a little bit before in terms of the IPO calendar. X itself might be going public. I spoke with a
That
friend
would be interesting.
who tells me that their bank loans have been cleaned up basically at par. Originally, the banks had noted that as impaired, so that's back. They got back to break even and collect their interest on it, so that's been better. They've sold a term premium coupon that has a qualified dividend. I think it's fairly complicated, but it looks like that was 3 times oversubscribed. But they had a pull back the kimono a little bit so you can see how business was. And X is claiming that their advertising is up 30% year on year in December, that advertisers are coming back. That's courtesy, I think, of the election of the man whose name will not be mentioned, coupled with the prominence of Elon.
Do you know who's advertising now in there? Red Lobster.
I thought they went bankrupt.
Lobster Fest is back.
Lobster Fest is back?
Yes. I saw
All you can eat lobster.
I saw this ad.
Is that true?
Yeah, I saw an ad for it last night on X.
You know what I can't understand?
If Lobster Fest is back, that's actually pretty correlated to
New York City has restaurants on the entire planet. Why anybody would travel from any other part of the country and then go to Times Square and eat at a lobster or
you could talk me into Bubba Gump.
Oh, for Pete's sakes. So what else do we know out there that people are not talking about? The market is still expensive, you think, on a multi?
Yeah, I mean, valuations are still as high as they've been. Looking at history, the only other time they were more expensive was during the tech bubble. So it's hard to argue that the market's cheap by any means. I'd say the other kind of topical item that's important, I think, to kind of talk about here is Fed rate cuts, right? So at the beginning of the year it was 5, or I know we've talked about this before, but another rate
beginning
cut.
of this year they were looking for 5 rate cuts.
Yeah, it was. I mean, maybe it was 4, but it was more than the one that's being priced in now, and the one that's being priced in now is not until November. So, I think as an investor, you really have to consider a scenario if we get the Fed being done cutting rates this cycle. I think that there's a real possibility.
Well, I think the Fed has egg on its face, which is the significant price of eggs.
That's an expensive face then.
It is an expensive face, and you wouldn't put egg in your beer either. I'm not going to say it costs more than the beer. These are sort of one-offs, but they show up in all kinds of areas, and they're hood ornaments for a broader problem.
But what is not a one-off is, let's talk about insurance. Insurance premiums have been rising, and given the LA fires, I think we'd be hard-pressed to think that they're going to be going lower anytime soon.
I heard a story. I was in Miami 2 weeks ago, and chatting with a friend who's an excellent investor. He's good-looking, lean, very handsome, beautiful wife.
Is that the criteria?
And he told me that in his condo, which I think he told me it was built around 2006. It's in South Beach. So it's a nice new condo. I'm sure it's spectacular, about 1,400 square feet or more. His insurance cost was $6,000 a year, which is a lot because the condo insures the outside, so he's insuring the inside. And then he was hit with a huge assessment, a $200,000 or $300,000 assessment to pay for the repairs associated with Surfside, where you've had decay in the kind of construction, things like that. That's going on throughout the entire sector down there. I spoke with another real estate investor down there who rents a big fancy place, as they all do down there. A friend tells me that once he described the area from Boca Raton south to Miami Beach as Silicon Valley. But I'll let that pun sit for a moment. And one person told me down there, who lives down there, said that there are 2 types of people who are working down there. There are people who are trying to sell you a coin, or they're trying to get you involved with their OnlyFans account. That there's this whole kind of underculture in Southern Florida. But let's go back to rents, where people have been going back to rents. And big houses and big apartments, they're slipping too.
Sure.
You have supply coming on, and you have that big march higher with Citadel. Now some of those prices are coming off the boil, and you're going to be bringing on a lot more supply. That's the great thing about Florida. They bring on supply. So prices appear to be moderating there. And that means for CPI, as Don's pointing out, that you look at CoreLogic and Zillow, those snapshots into real estate inflation appear to be slowing too.
But I think a little bit about this because obviously shelter's the biggest component of the CPI data that the government publishes, but this goes a little bit to the common man CPI that Jason talks about, right? Like think about the utilities contribution to the common.
Listen,
3%.
There's no doubt. Listen, I don't think people know what they're paying a kilowatt hour, but I'll bet you I can tell you in 10 years my cost in Vermont, which already has 13 cents now, north of 21 cents, and it's 100% renewable. It's imported from Canada via Hydro-Quebec.
Right,
I don't know whether or not those, would the importation of Canadian energy be subject to a VAT under the Trump administration?
I think we need,
So
you better install solar
you need
panels.
you need to make the privilege man CPI at this point with the cost of streaming services and whatnot.
well, the streaming services though are
The
interesting.
common man. We need
You know, Netflix is at a new high too, right?
Yeah.
But that makes a lot of sense to me because they've record demand and they're rising and they can raise price. So that's the best thing in the world for any business.
And they crack down on the usage. I mean, but that aside, everyone switched from cable because cable was so expensive, right? But now you pay
it's
for
the same-
17
same
streaming
price.
services, and we probably all pay more for these services when you combine the dollar value than what we were paying before.
There's no justice in this world.
It reminds me of XM radio a little bit when XM was commercial free when it first came out, and now it's commercials only.
Did Howard Stern ever make any money on that deal? Remember, he was supposed to.
$500 million deal. I thought.
Yeah, it was in stock though. I don't know whether I don't know whether he ever made any
Still a
money.
buck.
So there's only one.
I think he's still wearing a mask in his studio now. He's become a real germphobe. He's like Howard Hughes without long fingernails.
Way of the future.
Fingernails or the mask?
If there's only one more cut, Preston, what's the 1 year yield at? 4.20, 4.15, something like that?
Yeah.
Sounds like a pretty good.
I mean,
offering
but so
compared
we,
to the volatility of 10 year.
but that kind of suggests to me that you're not going to get that flow of flow of funds out of
It's not
the
gonna
money
happen,
market.
yeah.
fund.
Shouldn't you get a flatter curve out of this? People are thinking steeper. You telling me flatter?
Yeah, it's. I mean,
You're telling me that they're not going to
it's-
ease, and that the 10-year note's looking heavy. That yields are going to decline.
I didn't say yields are going to decline. I think yields are going to be range bound here.
Like the kind of.
Wow, hope you get paid big bucks for that.
But range bound is good for risk assets.
He is a senior.
Outside of the if you break out of that 475, that's when risk assets I think are going to start to feel a little pressure. And I think when you go below 435, you're like something else is going on here. Inflation's turning up. That
Now-
it might be too early to talk about stagflation from an economic standpoint, but the market will price that in much sooner than.
So we also know, and people listening to this, the 6 or 7 people are listening right now, stuck in traffic. Jason is now going to be, maybe, subject to Senate confirmation over the next couple of weeks, the Undersecretary for Financial Markets. And that has led to some changes at Strategas, including Mr. Grabinski here sits across from me, who used to wear this really crappy Burberry's tie. He's now wearing a Ferragamo today. If he's successful like Chris Verone, it will be a Hermes tie before we can say boo. What will your new responsibilities be?
Yeah.
Everything.
What?
Yes. No. It's. I mean, we're gonna continue. Writing a daily note, and we're gonna take on the publishing of the investment strategy notes that if Jason gets confirmed that he so published on Mondays and Fridays. So it'll be a little more. You'll get a little more Ryan Grabinski in your inbox.
Well, I hope that when they get that in the inbox, that the Jergens is nearby, because I think it'd be rather dry compared to the eloquence of Mr. Schrenner.
I'll be sure. That is for sure. The eloquence of my writing style will not be the same.
Is there anything else? And we're going to leave it right here. Anything else, Todd? You're making all kinds of facial expressions.
American Manhunt on Netflix was pretty good.
American Manhunt. What's that about?
OJ.
that
The
OJ?
trial.
Oh, incidentally, I saw today the Trump one of the Trump sons is going to come out with a steroid enhanced Olympics or something like that. Do you hear this
I didn't
story?
see that. No.
That you're going to have athletes and they can use any performance enhancing drug and they can all compete. It's going to look like a complete
They
circus.
said on this,
I didn't see that. I got to read
this
that.
documentary, his agent said that he did not he did not take his arthritis medicine the day of wearing the gloves, so his hands were enlarged.
Okay.
Hence the glove not fitting.
I think
Next week we'll talk about EV residuals. Stay posted. Thank you, everybody.
all right.